CIBC Capital Market. Thanks for joining us today.
It's a pleasure. Thank you.
So Trump, we know, likes the easy wins. The tariffs to him are an easy win. When you look at market reaction yesterday and today, which has been a bounce back, how would you interpret reaction of investors?
Yes, I think that the investment community is very confused at this point. And if the real and ultimate measure of intelligence is what you do when you don't know what to do, then the next few weeks and months will test the economic IQ of the market and every central banker in the universe, because they are the first to admit that they have no clue what's happening. Everybody is confused. We have this fog of uncertainty, and we have to try to make sense out of it. The point that I'm making is that there are some vulnerabilities to the position that President Trump is taking. He's not a superhero at the end of the day. Why? First of all, it's the market itself. We know that in the past, President Trump was looking at the market as a barometer for success. You cannot have a situation in which the stock market goes down under his watch. And clearly, the stock market is not liking the concept of a tariff in any significant way. That's one thing. The other is gasoline prices. You cannot have a situation, especially for his base, in which gasoline prices go up under his watch. And if you have a tariff on energy coming from Canada, they consume 21 million barrels a day in the US. They produce 13 million barrels a day. The difference, most of it is coming from Canada. So without it, automatically gasoline prices will rise in the US, impacting his base. The other factor to focus on is inflation. You go back to his campaign speeches. He was criticizing, Biden and Harris about inflation. The cost of living is dominating the agenda. You know what? Tariff is inflationary. If you impose 25% across the board, it will be inflationary. And another vulnerability is time. Why? Because the short-term pain of a tariff is much faster than the long-term gain, if there is any long-term gain. So the impact will be immediate, and he doesn't have time. Why? Because 2 years from now, there will be the midterm elections, and he really has to show a good showing there. So that's another factor. And if you have inflation, the Fed will have to actually raise interest rates. Trump always wants to see interest rates going down, so you have a conflict between the Fed and the White House, which is impacting the market itself. See vulnerability number one. So it's confusing, and that's why I think there's some vulnerabilities there that we have to consider over time. Okay,
so let me pick apart a little bit of what you just laid out for us, because I'm sure he's been warned about many of this before. We've seen it, we've heard it. Mr. President, interest rates are going to react, the markets are going to react, and that's going to be a problem for Americans. So if you're Donald Trump, it's almost like you have to wait for the damage to happen before you can then pull back. Would you agree with that?
To an extent, yes, and I think that there will be damage, and that's why basically he will have to change. We have seen it before. We have seen it in the Trump 01, and we'll see it again. It doesn't mean that he's not going to bite. There will be a lot of biting, but there will be more barking, I believe. I think that at the end of the day, and this is our working assumption, when the fog clears, and this fog will be clearing maybe in the second half of the year, we are going to see a situation in which the weighted average tariff on Canada will be 7-8%. Some sectors, maybe like dairy, forestry, will be 20-25. Some of them will be zero. Maybe the auto sector will be zero, close to zero. The weighted average will be 7-8, not 25.
So you think he will scale back as he did today? He gave a reprieve for the auto sector for a month's time, which seems to be the time he throws out. But that being said, they're also talking about April 2nd, full retaliatory tariff. So it is confusing in how this is rolling out.
Confusing is the key word. I think that the ultimate goal, as far as Trump is concerned, is uncertainty. And the tool is chaos. The more uncertain you are, the better it is for Trump. Why? If you are a CEO of a company, an American company, and you want to expand China, Mexico, Canada, the US, and you say to yourself, what do I need this headache? I'll go to the US. So you can get the benefit of a tariff without the cost of a tariff. That's basically the idea behind this policy. Create as much fog as you can in order to get more people coming to the U.S. where it's clear. That's more or less what they're trying to do. It doesn't mean that there will not be tariffs. There will be tariffs, but they will not last for too long. And at the end of the day, as I suggested, it will be 7-8% as opposed to 25%.
So let me ask you, I mean, obviously with tariffs, it's meant to bring the uncertainty home to Canada or home to China. But it's also, I would imagine, as confusing for Americans with their markets going up and down as they try and pivot to figure out where to put their money and what to invest in and when to pull it out. So the chaos that he's sowing goes not just through Canada, Mexico, China, it's also sowed in the U.S.
Bingo. That's exactly the point. And that's why it cannot last forever. That's the whole point. The point here is that it doesn't have much time to do that. The impact on the U.S. will be significant. The long-term positive, which is still questionable, but let's say that there is a positive, will take much longer to be visible. So all those forces suggest that at the end of the day, there will be a compromise. I think that what he has in mind, and I'm speculating here, at the end of the day, he wants to renegotiate USMCA. It's supposed to reopen in 2026. He would like to do it now. And he will say, listen, this is my demands. Those are the items that I would like to deal with, and let's talk. And I think that he will have the bargaining power. That's exactly what he's after, in my opinion.
Okay, so one thing that we've seen them do, and the Commerce Secretary mentioned this, is when things are going bad over here, we want you to look over here, right? So markets are tanking today on the tariff announcements. So, but look at all the forward investment we have. And there are companies, from Taiwan, moving from Canada, are bringing their headquarters back to the U.S. to appease Donald Trump and maybe benefit from deregulation. Do you put a lot of sort of trust into those investments sort of coming to fruition?
I think it will come in the near term, but then it will stop. I think that it's much more complicated to move headquarters from one day to another. It takes time. It takes planning. You cannot do it overnight. So I don't think that you will see the gain from this policy immediately. Clearly, if you maintain 25% across the border, and with many, many other countries, you will have a recession in the US, you will have a recession in Canada, you will have a recession in the EU, and then you will see something else happening. But you have to go through the recession first. And I don't think that anybody is ready for that.
All right, Benjamin Tal, I have to leave the conversation with you there, so I'm out of time. Benjamin, of course, is the Deputy Chief Economist at CIBC.